You are welcome to today's lesson. In today's lesson, we are going to look at something very important, though a subtopic under control account. It is called how to prepare purchase ledger control account. Before we look at this topic, I would like to remind us that this is not the beginning of, or this is not where we started this control account journey from. We started this control account journey from the definition of control account. We looked at the definition of control account. We look at the advantages of control account. We look at the division of control account, and we also explain the concept of contra entries in control account in one of our videos. And we've also looked at how to prepare sales ledger control account. So if you are just seeing the how to prepare purchase ledger control account now, you may not be able to understand some of the concepts we are going to explain here. I will advise and recommend very strongly that you go back and search for the lessons on control account, so you'll be able to understand what control account is all about. You understand the advantages of control account, understand the division of control account, and also understand the concept of contra entries, and also look at sales ledger control account. I promise you that if you are able to understand these two different videos, you will find it very simple and easy to appreciate what we are going to do in this lesson. Meanwhile, before we make progress, permit me to also bring to your notice what I call lesson objective. Every lesson must have a compass. That's what we call a compass to every lesson, what will guide our interaction and our journey, because we can't just embark on this without having a focus. So our lesson objective becomes our focus. In this lesson, we're going to look at just 4 objectives. Number 1, we are going to define what purchase ledger control account is all about. If you are asked in a nutshell, what is purchase ledger control account? How will you be able to define it? We'll look at it. And then we're going to state the rules of purchase ledger control account. We have a particular rule, a standing rule, that determine how to calculate or how to prepare purchase ledger control account. And the third objective is we're going to state the possible transactions on both debit and the credit side of the purchase ledger control account. Funny enough, students, once they get to the point where they are supposed to now prepare the purchase ledger control account, they will now be asking, what are those transactions that should be debited and what are those transactions that should be credited? So we are going to do justice to that. It's going to be a very interesting time, going to be a very interesting moment to demystify those mysteries behind the transactions that you see on the debit side and the credit side of the purchase ledger control account. And the last but not the least is to solve related problems from our exam guide. Please, I will not fail to always encourage students to go back to our exam guide. That is where you will appreciate what we are doing. Don't assume that you know until you are able to solve questions from our exam guide. It is the questions you solve from the exam guide that will now give you that assurance that you have mastered what you have been listening to. All right, having said that, let's look at the definition of purchase ledger control account. If you are asked, what is purchase ledger control account? Purchase ledger control account is simply the control account opened for creditors of the business. It's an account that is open for creditors of the business. Who is a creditor? Let's start from there before we look at the second part of the definition. Who is a creditor? A creditor is somebody that we, the business, have gone to buy something, buy an item or buy items, buy goods or buy product from without making payments. Or simply put, creditors are our suppliers. The suppliers that supplies product to us on credits. We can either call them creditors, or we'll call them what? Suppliers. It can be referred to as total creditors control account. Let me take that again. It can be referred to as total creditors control account, trade payable account, or account payable. I always take time to explain this to students because we have different terminologies that different authors will want to use. There are some textbooks that will call it creditors control account. Some we want to call it trade payable account. Some we want to call it account payable. So whether it is creditors control account, it is trade payable account, or it is account payable, they are all speaking the same language in different ways. So don't get it twisted. These are the various ways you can actually call this particular account. Let's look at the rule. The rule of purchase ledger control account. Sir, if I want to prepare purchase control account, what are the rules, or what is the rule to observe? I would like to remind us something about a rule. When you come across a concept that is governed by rule or principle or concept or convention, please don't be in a hurry to dive into such a concept without understanding the rule, because any shift or any compromise on the rule will affect your result. My challenge with students is that student goes into the examination hall, and when it is now time to solve a particular problem, either in physics, in chemistry, in maths, and even in accounting, the particular principle, the particular rule, or the conventions that govern that particular question, student will not be able to understand again. And at that point, you become very, very inefficient, you become very, very weak, you become impotent in trying to answer that question, because the solution to that question is in the rule. That is why at this point I encourage students to take time to master this rule, internalize this rule, personalize this rule. Your success in purchase ledger control account depends on your extent of mastery over this rule. If you can master this rule, I tell you the truth that you won't find it difficult to prepare purchase ledger control account. What is the rule? The rule is simply, it says every transaction that will increase the indebtedness of the business to the creditors or to the suppliers should be what? Credited, while the reverse should be debited. Let me come down to say it again. I said every transaction that will increase the indebtedness of the business to the creditors or suppliers should be what? Credited. Of course, you know that if you are owing somebody, there are things that can increase that debt you are owing. There are transactions that can increase it. What you were owing before, you were owing 1 million. But just within the space of 6 months, that 1 million has increased to 1.5 or 2 million. What are those transactions that can increase what you are owing? We are going to see it in our next in our next objective. We are going to look at those things. And then you were owing 1 million, but within the space of 6 months, your debt has been reduced to 500,000. What are those transactions that can reduce what you are owing? Remember, the rule is simply anything that will increase what you yourself you are owing, credit it. And anything that will reduce it, debit it. Let's quickly look at the next slide. Now, on the debit side of the purchase ledger control account, we have things that will reduce what you are owing. It's a possible transaction that will reduce the indebtedness of the business to the creditors or suppliers. They include, number one, cash or check paid to suppliers. Cash or check paid to who? To suppliers. Of course, if I'm owing Peterson 1 million and I decide to pay either by check or by cash, I decide to pay 200,000. Peterson can no longer hold me for 1 million. Peterson must understand that I'll pay 200,000. So that 200,000 has reduced the 1 million to 800,000. So anytime cash is paid or check is paid to a supplier or a creditor, it has reduced what I am owing. So that cash will be what? Debited. The second one is return outwards. The goods I have bought from Peterson, I decide to return it. Maybe because of defectiveness. I went to Peterson's shop to buy 4 bags of slippers, of bathroom slippers. Remember, slippers are supposed to come in pairs. Supposed to come right and left, right and left. Now, getting to my shop, I discovered that one bag is just one leg. Left. I can't sell it. Or right. I cannot sell it. What will I do? I have to return that bag. So if what I bought initially was 10 bags and I'm returning 1 bag, what will remain is 9 bags. So when Peterson wants to come to ask for his debt, he's not coming to request his debt for 10 bags, for 9 bags. So that 1 bag that is returned back to Peterson is what we call return outwards. And it is called outwards because it is coming out of the business back to the supplier. That will reduce what I am owing my supplier. Then credit note received. I actually bought from my supplier on credit and I am owing my supplier. Then my supplier now sent me credit note. He said, hey, when I was calculating, I over-calculated. You were not supposed to be owing, you're not supposed to be owing me 1 million, but you are supposed to be owing me 800,000. Now, credit note is always an overcharge. Credit note is a note that is given for overcharge. So when credit note is received, it has reduced my indebtedness. It means that what I thought I was actually owing initially was higher than what I was actually owing in reality. So that credit note that I received has reduced what I am actually owing my creditors. And then the next one is discount received. I have received discount. Hey, Peterson told me to pay, I'm owing Peterson 1 million naira. Peterson said, if you can pay this 1 million naira before the end of February, I'm going to remove 50%. 50% of 1 million is 500,000. So I am going to struggle to fight to ensure that I'm able to pay before the end of February. So instead of me now to pay 1 million, I'm going to pay 500,000. So that discount received from my creditor Peterson has reduced my debt to 500,000. So discount received will also reduce my indebtedness. And then bills payable. Bills include, I could be water bill, NEPA bill, any bill at all that is payable is also it also reduces what I am owing my creditor. And then the last but not the least is contra entry, or what we call set off. Like I said earlier, this concept has been properly explained in the lessons on control account. But for the sake of emphasis, I will just have to mention it the way it was explained. I said contra entry is actually a transaction that is centered on when your debtors becomes your creditor. Let's use our normal Peterson that has been our customer. Peterson is my creditor, my supplier, but somehow Peterson is also my debtor. The person that becomes your debtor can also be your creditor. You can go to somebody that is owing you to also buy on credit. So you don't need to say, okay, let me pay you and then you pay me. What you need to do is just to counterbalance. If he was owing you 10,000 and you have gone to buy something worth 5,000, you don't say, let me pay you 5,000, you pay me 10,000. Just subtract your 5,000 from the 10,000 and the person is meant to pay you 5,000. So when this happened, it becomes a contra entry. Another very simple way you can look at contra entry is when a transaction affects 2 accounts. When a particular transaction affects 2 distinct accounts in a single book, then it becomes a contra entry. This is also a very typical case in cash book. It happens in cash book when money is taken to the bank from the office and when money is withdrawn from the bank for office use. All right, let's look at the credit side. Now, the credit side of the purchase ledger control account, this is where transactions that will increase what we are owing, what we are owing our creditors will be posted to. I say possible transaction that will increase the indebtedness of the business to the creditors or suppliers, include number one, credit purchase. Of course, you know that the more you buy on credit, the more your indebtedness. Last week, we bought on credit 100 bags of cement, 1 million. And then this week, we are also buying on credit 50 bags, 500,000. What has happened? Our debt has increased from 1 million to 1.5 million. That is it. So the more you buy on credit, the more your indebtedness increase. And every credit transaction, every credit purchase must be on the credit side. And then discount received, withdrawn. Peterson gave us discount and asked us to pay at certain time. Just like the instance I cited. He said if we can pay before the end, we are owing Peterson 1 million. And he said if we can actually pay before the end of February, we should pay 500,000. So we struggled, we couldn't pay. At the end of February, we were not able to pay. So what did he do? He has to withdraw. So the discount that was given to us was withdrawn. So the money has now gone back to 1 million instead of the 500,000 that we are actually struggling or rushing to pay. So discount received withdrawn can actually increase our indebtedness. And the last but not the least is what we call cash refund. When cash is refunded to us, then our indebtedness can actually increase. You know, a student can ask, at what point can cash be refunded? Remember, we didn't say payment refund, we say cash refund. Bad money. Currencies can be counterfeits. You have a bundle of money that are useless. When this money is given for payment and it is discovered that these are counterfeit, it can be refunded. They can give it back to you. They don't have anything to do with it. This has happened several times. When you go to the market with counterfeits, you go to the market with bad money, then you go to, and then the seller said, no, this money is bad. They can't take it. Once that money is returned back or is refunded, the bill is still looking at you. So cash refunds is also one of the transactions that can increase our indebtedness to the creditors or the suppliers. Having said this, let's quickly look at an illustration that can really push the message home. We are not just teaching, we're not just explaining this, we are preparing students that can have an A in accounting without tears. And like I mentioned earlier, one of the things that can really help us to have an A in accounting is constant practice. Don't assume you know. Don't assume you have arrived. Always practice. And that is the reason why we have put exam guides together. We want students to always go to the site and solve as many questions as possible. Meanwhile, let's look at what we have here to see if this will explain further what we have discussed so far. Now, Mr. Peterson had the following balances in the books on 1st August 1996. Sundry creditors. These sundry creditors has to do with the creditors we had at the beginning of the year. We have $9,724. Debit balance in purchases ledger. This is the balance of last year that is brought into this year, $660. The following transaction took place during the month of August. Payment to creditors. We were able to pay our creditors $28,368, and then bills payable accepted. We were asked to make some payments, which we also accept, $15,126. Discount received, $1,838. Purchase return and allowances, 79749, and then sales and purchase ledger transfer. That one is basically contra entry, and then credit purchase 47317. You are required to prepare purchase ledger control account. All right, let's quickly see how we'll be able to prepare purchase ledger control account from the questions that has been given to us. Don't forget, this method is what we call the T method. This method is called the T method. Now, we are looking at purchase ledger control account. This side is your credit side, and this side is your debit side. You write your $sign is the currency we are working with. And remember the rules. Don't forget the rules. What is a rule? Debit everything that will reduce what we are owing our creditors. Let me say that again. Debit everything that will reduce what we are owing our creditors, and credit everything that will increase what we are owing them. Now let's look at the question. Sundry creditors, that is the creditors of, let's assume is July, that is brought into August. So it's going to be your balance brought down. Your balance brought down there is 9,724. 9,724. 9,724. And then debit balance in purchases ledger. This is our debit balance for July 1996. So it will come here as our balance brought down also, and it is what? 660. 660. Then the next transaction, over the other transactions for the month, payment to creditors. We have said that when you make payment to creditors, it will reduce what you are owing them. So you quickly come here, payment to creditor. They did not specify whether it is cash or whether it is what? Check. So just write payment. Just write payment. Payment is how much? 28,000. 28,368. 368. Then the next one is bills payable accepted. Write B/payable. B represent bills, and then you write your payable there. Bills payable accepted is 15,129. 15,129. Then the next one is discount received. Just write D/receive. Discount received 1838. 1838. Then the next one is purchase return and allowance. P/return. /return. Purchase return. And okay, just write purchase return. Purchase return here is 749. Then the next one is sales and purchase ledger transfer. Just write set off, which is contra. Set off. Your set off here is 1498. 1498. And then the last but not the least is credit purchase. So your credit purchase here, just write C purchase. C purchase. Your credit purchase here, is 47,317. 317. 47,317. So it is now time. It is now time to balance the account. All right. Now, I always explain to students that it's not just enough to post transaction into the account. What the examiner will also want to check is your ability to balance the account. And to balance the account is a very simple one. First of all, add everything that is on the debit side, add everything that is on the credit side, and then once you do that, you'll be able to know the side that is high and the side that is actually low. Now, when you want to balance, let us do the addition together and see what we are going to get. All right, let's start with the debit side. We are using our mathematical tool to do the addition. Let's go. 660 plus 28368 plus 15129 plus 1838 plus 479 plus 1498. 1498. You have the debit side. Let's write it here. Debit side is equal to 48242. You can use your calculator to confirm that. Now let's look at the credit side. The credit side is 9724 plus 47317 is equal to 57041, 57,041. So looking at the both of them now, these two figures, you know that this side is higher than this side. So the total column here is going to be what? 57,041. 57,041. Don't forget, since you are going to end the account, you must draw a small line here to show the accountant that you have closed this account. Meanwhile, how do we now get the balance? The balance at this point is simply to compare your debit and your credit side. So what do you do at this time? Compare. Let's subtract. When you compare here to here, is subtracting here from here, 48242. Subtracted from 57041, you are going to have, so your balance here now, balance carried down is going to be 8799. So your 8799 is your balance carried down, and then that also will now be your balance brought down, 8799. So 8799 is what is going to be taken into September as a balance, your credit balance. Remember, that is your credit balance. This is your credit balance that will be taken into September to begin. So by the time you open your creditors control account for September, you are going to have this that will now open it just the way 9724 opened this one that we prepare. 8799 will be the one that is going to open. All right, we have looked at this. The next thing we are going to do now is quickly going to our exam guide. And then you have up to how many questions here? You have up to 22 questions. Up to 22 questions that we have here that can really help us to explain what we have done so far. All right, so let's look at what we have here. Question 1. Question 1 is before us here. It said they've given us transactions 1st of June 2011 and 30th of May 2012. Now we have creditors, we have debtors, we have cash paid to creditors, we have cash received from customers, we have goods returned to suppliers. Now, purchase for the year. They want us to, from this question now, to determine the purchase for the year. It's a very simple thing. So now let's quickly go back to the whiteboard and then see how we'll be able to answer this question. So the first thing to do, like I said, we are always using our T method. Don't always forget, this is our T method. This is your credit side. This is for credit and this is for debit. And we are preparing purchase, ledger, control account. The The currency there is, all right, let's go. Now, if you look at these transactions given here, we have creditors, we have debtors, we have cash paid to creditors, cash received from customers, return goods to supplier. The examiner here knows that we don't have any business with debtors here. We don't have any business with debtors because we are not concerned about debtors. Debtors are the people owing us. We are concerned about the people we are owing, which are our creditors. So the amount you have at the beginning of the year, which is 1st of June 2011, will come here as your balance brought down. Your balance brought down there is 2,495. 2,495. 2,495. And then balance at close is your balance carried down. Balance at close is 2,285. 2,285. That's your balance at close. We have taken care of the creditors' first transaction. Now we don't have anything to do with debtors. Now look at it. Cash paid to creditors. Remember, we have said everything that will reduce what we are owing is debited. So you come here and you write cash. Well, how much is cash? Cash there is 32,170. 32,170. And then the next transaction, cash received from customers. We don't have any business with people that are owing us. We are concerned about people we are owing. So you skip that transaction. The next one is goods returned to suppliers. Another name for goods returned to supplier is called return outwards. So you just write /outwards. Outwards is 500. So by extension now, this is how it's going to look like. Is there any other thing? No. So this is how it's going to look like. You are not going to add everything here and add everything here. Let's add everything that we have here. Pick up your mathematical set and begin to add 32,170 plus 500 plus 2285. What will it give you? It will give you what? Your debit side is equal to what? 34,955. Then your credit side is equal to what? 2495. You can see the margin now. So 34,955, 34,955 will be in your total column. And then the difference will now give you the total purchase. So let's subtract now. Subtract this from this. Well, let's subtract now. 34,955 minus 2495. What will it give you? Your answer, let's subtract, is going to give you your purchase now. It's going to give you 32,460. 32,460. So 32,460 is the answer. Now let's look at the options given to us. Option A is 32,780, which is wrong. Option B, 32,880, which is wrong. Option C, 31,960, which is wrong. Option D is 32,460. That is the option that corresponds with our solution here. So the answer there is D. Let's go to question 2. The question 2 again, they said, use the following information to answer this question. Cash purchase. They've given us cash purchase. Cash purchase is 29,641. Creditors 1st January 2014 is 2,473. Creditors 31st December 2014, 3,117. Cash paid to creditors 127. 345, and discount received is 4211. The credit purchase is, they want us to calculate our credit purchase. This is looking like the first one, but the only difference is that in this second illustration, there is what we call cash purchase. Please, I will want to encourage my students not to always forget that the account we are preparing is called Purchase Ledger Control Account. It has no provision for cash purchase. Cash purchase is always in the cash book. It will be on the credit side of the cash book, and the item that is purchased is debited. All right, so let's quickly rule our T method. This is our T method. You have your credit side, you have your debit side, and remember it is purchase ledger control account. Control account, and you have your currency sign here. All right, let's go. It said credit purchase, like cash purchase, it has nothing to do with us. That one is just on its own. Then creditors at the beginning of the month is always your balance brought down. So your balance brought down here is 2473. 2473. It is set 2473. Then creditors at the end will always be your balance carried down, which is creditors at the end 3117. 3117. All right. Cash paid to creditors. Cash, because it's going to reduce what we are owing, is 127 345 345. What again? Discount received. Discount received. Discount received there is 4211. 4211 is 4211. Very soon we are going to find out our credit purchase. 4211. So let's add. Is a usual thing to do. We are going to add now. So let's add 127 345. 127 345 plus 4211 plus 3117. What is the value? Our debit side is equal to what? 134673. What of our credit side? Credit side remains 2473. So you can see now that this is higher than this. So you are taking the higher number 134673. 134673. Now compare both of them. Just subtract 134673 minus 2473. So your total purchase is going to give you, your credit purchase rather. Your credit purchase is going to give you your purchase, your credit purchase. Credit purchase. Your credit purchase is going to give you 132,200. 132,200. Please note, if you were asked to calculate total purchase is simply equal to credit purchase plus cash purchase, which will have given you, our credit purchase here is 132,200 plus cash purchase is given in the question as 29,642. 29,641, which will have given us 29,641, which will have given us 161,841. 161,841. This will have been our total 841. This will have been our total purchase. But what you are asked in the question is not total purchase, but you are asked to calculate credit purchase. So from the question, our credit purchase is 132,200. Let's look at the options. Option A is 134,673, which is no. Look at it. B, 161,841. Look at it. 161,841. The examiner have to put that there. Some people may not know it. That is not the answer. That they were not asked to calculate total purchase, but you were asked to calculate credit purchase. So it cannot be B. Then C is 132,200. 132,200. So our answer there is 132,200. All right. I think this is how far we can actually go. We encourage students to keep going to our exam guide and answer as many questions as possible to be able to internalize what we have taught. So far, a recap of what we have learned. Number one, we have defined what purchase ledger account is all about. We said it is open for creditors. And then we've also looked at the rule of purchase ledger account, and we have purchase ledger control account. We have said that every transaction that we increase what we are owing our creditors will be credited, and transaction that will decrease it will be debited. And then we look at transactions that will be on the debit side, and we look at transactions that will be on the credit side. I encourage students to go back to the lessons and familiarize themselves with it and go to the exam guide to solve as many questions as possible.